Hey guys, so these are the stocks that I am currently looking to buy this week. We'll go on it one by one. So, first stock is Meta. Meta is currently sitting at P/E ratio of 22 and a dividend of 0.33. It doesn't provide much of a dividend, but if we look at the intrinsic value, it is currently sitting at 15% overvalued. But the growth rate that Meta is growing currently is phenomenal. So I think it's a good opportunity to invest now. Second stock is Amazon, and I think this is also 15% overvalued. Amazon is currently sitting at 27 PE, which is currently high. It doesn't provide much of a dividend also. The stock took a dip after the capex announced for the Amazon. It took a 19% dip. I bought it in last week also. I'm gonna continue dollar cost averaging this. The next stock is Berkshire. I think this is also one of the stocks that I am keen into buying for this week. I bought it last week also a little bit. Think it is currently overvalued by 10%. Microsoft, I think it is more than 10% overvalued because of the capex caused by OpenAI. But I think it's a phenomenal stock still, and it is sitting at nearly 10% overvaluation. And if we look at this chart, we will see that it has currently taken a dip of 20%. Investors are worried about the capex spending that Microsoft is doing in OpenAI. I think in the long term, this capex will pay off. Another stock we can look at is Tencent. I have bought it last week. It took a dip after that, but I am gonna continue buying this. Currently, it is sitting at 5% overvaluation. It doesn't provide any dividend, but it's a very stable business. So I'm gonna continue buying and dollar cost averaging into this. There are two stocks that I'm buying which are currently undervalued and I think can give good returns over the years as this AI disruption is happening. These are Sanofi and Novo Nordisk. I think these two quality stocks are 20% undervalued, and I think in the long term these will give good returns. Both of these stocks provide dividend. Sanofi at 4% and Novo Nordisk at 3.75%. Both of them are currently sitting at low PEs. One is 13 and another at 19. I think these two stocks are currently safe with AI disruption and will provide me support when things goes down. So I am going to dollar cost averaging into these two in the coming week. There are three more stocks that I am currently looking at. The earning releases are coming up for these three stocks. One is Moody's, Sprouts Pharma Market, and Nice. I haven't done research on Sprouts Pharma Market and Nice, but for Moody's, I have already done some evaluation and I think currently it is 27% overvalued. So if after the earning releases market corrects the share price, then I'll be buying into it. Currently Moody's is sitting at 34 P and after the Anthropic event it falls down by roughly 20%. I think it should go down more and correct by nearly 25%. Sprouts Farmer Market and Nice both are sitting at low P's. I will not buy these two till I finish the research on these two stocks. So that's it for this video. Hope you like this one. Please drop a like and subscribe for weekly updates.